Hey everyone, I wanted to do a video today on the warrants that Tenet Fintech has free trading in the market right now. The warrants offer an interesting alternative to common shares right now, as they're trading at a new low of 40 cents. Um, you can see here, even when came out, they were trading at 70 cents, and then they were a little bit misunderstood by the market initially, and once people kind of understood how they worked, the price shot up, came back down, and then continued up as the share price rose. So initially, people thought that you would get one warrant equals one share. Well, not so with Tenet Fintech. You need two warrants in order to get one share. And you have to exercise both those warrants in order to get the share. So your exercise price is $3.50. So essentially, you have to pay that twice on whatever amount of warrants that you have in order to get half the amount of shares. Right? So let's say you have 10,000 warrants and you wanted to exercise those. You would get 5,000 shares for $7,000. Plus whatever you paid previously when you bought the warrants on the market. So why would you buy warrants? Well, there's kind of two main reasons I think anyone would buy warrants. One, they're bullish on the short term, whether that's a trade, like a swing trade that they're trying to make over the coming weeks, or whether that's a short-term catalyst, say earnings coming up, or even if they think the share price is going to rise considerably over the next year. The other reason would be, let's say you have a limited amount of funds now, but you want to reserve yourself essentially the ability to buy shares later because you know you're going to get a large inflow of funds later, whether it's a company bonus or a big tax return, inheritance, whatever, or another stock that you're selling, let's say. You would essentially buy the warrants at a substantially lower price than what you would buy the shares for, and thus reserving you a certain amount you could then exercise to get those shares later, right? But most people wouldn't do this unless they are really expecting, a share price a lot higher than $7 a share, because of that $3.50 exercise price per warrant, and the fact that you need two of them. So I just want to go over this chart that I made really quick here. I got the calculation on the FinexAx website. Basically, this gave me the intrinsic value of the warrants. So share price minus exercise price divided by conversion ratio gives you this value. So for an example, $10 minus $7 divided by 2 is $1.50. That would be the intrinsic value of the warrants. And that intrinsic value would be there up to the date of expiration. Now, there's also something called extrinsic value baked into the warrant. And this is value given to the warrant based on things like time remaining and share price direction and momentum. If the share price is trending upwards and it's going quickly and there's lots of time remaining, this extrinsic value is going to increase, giving us a much higher price. So I made this chart here of the approximate historical price of warrants on Tenet Fintech. Today, at $2 a share, they're trading at 40 cents. At $3 it was 80. At $4 it was roughly $1. $5, $1.20. And then if you go back to the higher share price levels, closer to our break even, as well as when we had more time to expiration and we had more positive price movements, we jumped up to $2, $2.25, $2.50, $3, $3.50, $3.75. So this gives a much higher percentage return possible that decreases over time. So one thing to keep in mind, if you were to buy 10,000 in warrants today, or 10,000 shares in warrants today, as long as the share price rose to $12 before expiration in July of 2023, you would essentially break even. You would actually do slightly better. Your return would be 500% on shares and 525% on warrants if you just sold those warrants on the open market, because they would be worth at least $2.50. However, let's say by the end of the second quarter or by the end of the third quarter, we get a report, things are looking good, we have positive price momentum, then you could see this value for the, if you believe that in the short term we're going to see positive price momentum and the price is going to raise back up to $3, $4, $5 in the next few months, you could be looking at a much better return on investment versus just buying shares at the expense of risk. Because if you're wrong and it doesn't, and we're still trading below at this time next year, then you essentially just threw away money and you bought warrants that are now worthless. Now, if you wanted to, you could go ahead and exercise the warrants. And you could do this whether the share price is $2, $7, or $20. So if exercised and sold 10,000 warrants, you would get 5,000 shares. But there's a total cost required. So your cost per share, however, is fixed. But you have to exercise them by July of 2023 for a total amount of 39,000. As you can see here, let's say this time next year we're trading at, or sorry, July of next year we're trading at $5, and you decide to exercise, which you could do, you would instantly be at a negative return of $14,000, which would be bad, but if you're still bullish on the company. So another thing to understand with the warrants is, yes, if you're holding on to warrants at July 2023 next year, you don't sell them, you don't have the funds to exercise, and you just let them expire, that money's gone. And another thing to keep in mind is, as they're free trading on the Canadian Stock Exchange, they are not extendable. In some cases, warrants can be extended, and often are, but free trading warrants cannot, because this would be unfair on the open market due to changing things like the time decay on the warrants. And if the company issued a press release, say in June of 2023, hey, we're going to extend our warrants for another year, everyone that sold those warrants leading up to that would essentially have just gotten screwed. So you'll never see that happen. It's not allowed anyways. So just keep that in mind. That's part of the risk of deciding to buy the warrants. Okay, everyone, thanks for listening. If you enjoyed this video, please like and subscribe.